Welcome back to Capital Market Live on Channels Television. Join the discussion on Twitter at Channels TV and at CTV Tempili. But let's kick off this segment with African markets and their performances this week. We have the EGX 30, which is the index of the Egyptian stock markets, and that market sustained its positive trend of by 0.80% for this week, ending at 13,098.54. It has actually crossed that psychological line, 12,000 psychological line. And now we have the Nairobi Stock Exchange All-Share Index, which is still negative, and the year-to-date is also not looking too good at the moment, but it is gradually easing out of that negative territory. The Ghana Stock Exchange Composite Index has a 1,898.34 points, inching higher this week by 1.79% and gradually touching the 2,000 psychological line, having had a 12.39% year-to-date performance. The Johannesburg Stock Exchange came in green with a week-to-date record of 2.03%. Before we went on break, we were talking about the impact of the central bank's significant interventions on the Nigerian capital market, and Corridor Logun from Pan-African Capital has been helping us out with his perspectives. Let's continue the discussion and basically look at this FPI, this foreign portfolio investments that investors have generally been looking at, you know, getting their repatriating the investments in the country, from this country to their own nation. But of course, the provision of the CBN intervention hasn't been able to help to address that.
Well, what the CBN has done is fascinating. You know, they've been able to address some aspect of the issue. For the exchange rate, it's more of an internal struggle for us, because what we're trying to do is to harmonize the official rates and the parallel market rates. If you look at on the other hand, the stock market, you know, the market can stay irrational longer than you can stay solvent. So what the CBN has done is transfer power to the banks. If the banks would play their role quite effectively and not engage in any malpractices such as round tripping, we will see investors, especially foreign investors, see the value in the naira, because most of them still believe that the naira is overvalued by at least 20-30%.
Well, I think the manufacturers are the ones that seem to be benefiting more from the forwards markets, domiciled at the FMDQ FMDQ Securities Exchange, and of course the fact that it is now, this intervention seems to be more tailored toward the retail end of the market for, you know, travel allowance, business allowances and all of that. But for some investors who are really looking at getting FX to be able to, you know, recoup the value for their foreign investments in the country, what do you think they will be requesting or will want to see from the central bank now?
Well, the manufacturing sector also enjoyed some accommodation in terms of, you know, the 60-40 allocation was actually removed, and so there would be good allocation to the manufacturing sector. We have to also understand that we have to recall that manufacturing needs to, you know, be optimum for this country to move ahead. It is where we should actually pay most of the attention so that we can grow from where we are now, it's import dependent, to a country that can earn forex via export. So the attention on manufacturing is fair enough. The attention on the retail end, you know, to harmonize both rates in the country is actually fair enough as well.
Okay, so we have spoken to a couple of other analysts like you as well, and one of the things or points that they've identified is that, look, we need to also have a structure for some of these investments that are actually coming to the country from foreign investors, basically, and they're looking at the possibility of a 90-day window as well, just like you have a window for manufacturers and then another window for the FPIs and all of that, so they can, you know, get hold of this fund. Do you think this is something right and a step in the right direction?
It is, and this is why. So the CBN has rich data, it has enough information, and it knows the amount of people that want to come into the country with their funds. It is very simple. We can have structured products for these people. They can swap currencies at with this structured product. So the CBN just needs to sit back and identify who are the genuine investors, because we know some investors will show interest and back out at the end of the line. So the CBN can probably use consultants to find who these investors are and structure products that can help them not have glitch when they want to repatriate funds, because it is very important that when you want to take your money out of an investment, it should be easy. It should be easy.
And some things that we've heard again is that it is a bit difficult, though, to ascertain the amount of foreign portfolio investments tied down in Nigeria, but some have analyzed it that it is hanging between 4 to 5 billion US dollars, and that this is one of the major areas that investors in the capital market really want attention to be focused on. Does that bother you in any way?
Well, you see, these monies can actually not leave the system if there were products to invest them in. Take, for example, if in the capital market we had derivatives and futures. What this does for us is that producers can actually buy any desired amount of protection against instability, and this would allow government to reallocate resources, the resources currently used to directly intervene to stabilize prices.
Right. Okay, let's also look at the fact that we've had a lot of T-bills auctions, we've had OMO and all that. Tell us how this has really impacted the markets largely.
Well, we're very aware of the federal government savings bond, which had about 2 billion in subscription for the first tranche. I don't think that's very successful, though. These products are there for us to be able to take advantage of the market. Okay. And what it does for us is it is building our savings culture. But we have to be conscious of the fact that when we save, where do we put the savings at the end of the day? We have to be able to have enough investable projects within the country that these monies can go into, and investors can actually earn reasonable dividends on their money. So for the T-bills, and we've seen the Euro bond, well subscribed to, and so that just tells you the amount of investment opportunities still in the country. If you look around and you see projects that are ongoing, especially the one going in Lagos as the rail project, you can see into the future and say this is going to transform Lagos State, it's going to transform transportation in Lagos State, and investors are going to make money from this kind of projects. So these are the kind of things that people want to see their money is going to.
Okay, Corredio Logun from Pan-African Capital, thank you very much for making it again to capital markets. Thanks for making out that time. We really appreciate it, and do hope to have you again on the show. Looking forward, we know the management of NIPCO PLC and Mobile Nigeria will be at the Nigerian Stock Exchange next week to possibly bring the NSE up to speed on the change of name for the acquisition of ExxonMobil's 60% equity stake. That's one company to watch out for in terms of its mergers and acquisition tales, which is going to be coming into reality very, very soon. But that's our program for this week. Our discussion about the market are open on our Twitter handles at CTV Tempili and at Channels TV. I'm Temple Ashaju, and I still plan to see you next time. Have a lovely weekend.